Hey, Jason Williams here with Ironclad Underwriting, and today I want to talk to you about exit strategies and what exit strategies mean and why they are important. So when you get into real estate, or actually you want to get into any investments, you want to have an exit strategy. Otherwise, you just get in and you feed it with no end in sight, don't know what's going to happen, and next thing you know, it's not doing anything for you. You don't know if you can do anything with it, and maybe you refi or sell a property 20, 30 years from now. But if you had your exit strategy in sight or in mind when you bought the property, you would put yourself on a timeline. With apartment syndications, a lot of times exit strategies are to sell, usually within like 3 to 7 years, probably 5 years on average. Maybe do a refi to get into long-term debt in year 2 or 3. So all this you need to keep in mind when you do your planning, because all that affects how your investment is going to turn out. If you, like I said before, go into a property with no end in sight, no end in mind, what are you going to be doing? And yeah, maybe if you have like a joint venture or you're doing it all alone, you're not using anybody else's money, yeah, you have more flexibility in that, and you just want to live off the cash flow, and maybe your exit strategy is to live off the cash flow and leave the property to your kids. If that's your exit strategy, guess what? That's your exit strategy, and you already had that in mind. But when other people's money are involved, most people don't want to live with a property indefinitely, bringing in cash flow. And so they're going to want to see, are you going to plan on selling it or refining it, or are you planning on buying partners out? And so with that in mind, you just need to keep exit strategies at the top of your mind whenever you do underwrite, because that dictates what your business plan is. So maybe you're doing a value add, you're planning on buying an apartment complex, using other people's money, do a value add play, bring it up to market rents. Then guess what? You can refi it. In a good economy, you can refi it, get your investors a good portion of their money back, and then sell it a couple years later, get them all their money back, plus some returns that you projected. That's ideal. That's not always the case. And sometimes exit strategies need to change, but you still need to have one in mind, plan for it, and then if things change, then you can start changing your exit strategy, letting everybody else, all your other partners, investors know, hey, we are altering our exit strategy, and we were planning on holding it for 5 years, but economy's down, so maybe we're going to hold it for 2 more years to see what it's doing. So exit strategies, very important. And if you like what you hear, you can listen to more on my Ironclad Underwriting podcast. You can go to my website, ironcladunderwriting.com. Look me up on YouTube, LinkedIn, Instagram. I think I'm on most of the platforms. So again, this is Jason Williams with Ironclad Underwriting. I'll catch you next time. Bye.